Today we're going to look at one simple fact that will cure your FOMO trading once and for all, so keep watching. The incredibly simple observation that I'm referring to is that price virtually always retraces back to or below the breakout level in price. To show you this, I've pulled up a 4-hour chart of Apple stock, and this is going back a couple of years. And once again, that observation is that virtually always, now there's obviously times when this is not the case, but at least 9 times out of 10, when a previous high is broken, the price will retrace back to that high or below. So here's what I mean. So right over here we have the first instance on this chart. Price broke a previous high and then immediately went below that high. We have it again right here, breaking sort of this intermediate high, and the price retraced a whole lot. Now let's pretend you're trading and you see this at the open. Price gaps up, keeps going higher for 4 hours, and in the afternoon it's trading at 124, whereas the previous day it closed at about 117. So this thing's up like 5% in a very short period of time. Can you not see this kind of move inducing FOMO from a lot of traders? Doesn't it just look like it's just poised to test this high at 137? So of course what ended up happening was price made a really deep retracement. And even when breakouts quote unquote work, just taking a look at this huge breakout with this huge gap, you can see price returned almost to the breakout level. We had that really deep retracement that would have allowed a trader to get a very healthy discount on the price, even if he or she missed all of these previous moves higher. And even during trends that seem to be really steady, that do not appear at first glance to have retracements, such as the trend we had over here, if you look closely, you actually see that virtually every single time there was a breakout, the price returned back to or below the breakout level. We see it again right here. We had a breakout, right? And then it returned back to the breakout level, right? We see that again right over here. We had this really strong move, and then it returned back. Breakout, return back. And this happens over and over and over again. So if you simply arm yourself with this knowledge, you'll never do a FOMO trade again. So let's just go forward a little more in time and see some more examples. So right here, we have a breakout and then it returns back. Breakout, returns back. Can even extend that over here. Huge breakout, returns back before it gives a tiny little pop. Now let's say you were bearish and you see this sort of level over here breaking. We see that price went down aggressively and then returned back to test that breakout level. We see that again on the long side here. We have this breakout right there that returned back to the breakout level. And then we see it over and over and over again, all in here. Breakout, retest. You guys get the idea. If you zoom in to like the 30-minute, 15-minute chart, you'll see a bunch more in here. And this isn't just true for highly liquid stocks like Apple. If we take a look at Bitcoin, I'm looking at a few bullish weeks we had back in February of this year. So basically you can see how when we've had major breakouts, or quote unquote breakouts, the price returned back to or below the breakout level. So this price action, when traders first saw it, that's going to look like a major breakout to a lot of traders, and a lot of traders probably FOMO'd into this on the long side. And as you can see, price made a really deep retracement. This breakout above that high, price returned back below the breakout level. We see it again here. There's a level. This would have been interpreted as a breakout and then it went lower. And we see that here on this little climb. Breakout, retest, breakout. And each and every single time here, except maybe this, it was close, this was close. But pretty much every single time, price went back to or below the breakout level. And let's just round this out by taking a look at a Forex pair as well. And this concept is especially true for Forex, where the market really seeks liquidity. So here we have what looks to be a breakout to the upside, and then there's just a huge move lower after that. Same exact concept. This break to the downside, strong break to the downside, and not only did it rally above the breakout level, but it actually took out this high right here. And there's a lot of, some call it manipulation. There's a lot of this liquidity seeking in the Forex market. Here you see it again, major low being broken, and then later it's retested before a move lower. Today is May 9th, and just applying this concept, we see this breakout over here, and there's a really good chance that the market is going to come back and retest that level before continuing its move. So once again, arm yourself with this knowledge and FOMO will become a thing of the past. And if you've enjoyed this content, I appreciate if you leave us a like. There are more videos like this one coming soon with more concepts to help you as a trader. So hit that subscribe button and I'll see you in the next one.